Welcome to Explain the Charts, where we break down complex market movements in a clear and concise way. Today, October 17, 2024, we're focusing on the EURUSD currency pair, which is experiencing significant volatility driven by a confluence of recent news and technical factors. Let's start by looking at the recent headlines. The European Central Bank, ECB, has cut interest rates for the third time this year, citing slowing inflation in the Eurozone. This move has fueled a dovish sentiment as investors anticipate potential further rate cuts in the coming months. The ECB's actions, combined with the sluggish economic growth in the Eurozone, are pushing the euro lower against the US dollar. On the other hand, the US economy continues to perform well, with robust fundamentals and a cautious tone from Fed officials. While the Fed is expected to cut rates by 25 basis points next month, there is still uncertainty about future monetary policy. The Fed's outlook and the U.S. economy's strength are providing a significant tailwind for the U.S. dollar, further pressuring the EURUSD pair. Now let's dive into the chart data and see how these recent events are reflected in the EURUSD price action. We'll start by looking at the daily chart, which gives us a broad overview of the EURUSD's recent performance. If we zoom in on the past few weeks, we can see a clear downtrend in the EURUSD. The pair has broken below the 1.0800 support level, which is a crucial psychological level that could signal further weakness. The daily chart is also showing signs of overselling, which may suggest a potential short-term rebound. Let's switch to the 1-hour chart to see if we can get a closer look at the recent volatility. The 1-hour chart shows a series of whipsaws and price spikes, indicating high volatility. We can see that the EURUSD has bounced back from the 1.0800 level in the past few hours, showing some signs of potential resilience. However, the overall downtrend remains intact, and a break below the 1.0800 support could trigger further selling pressure. It's important to note that while the recent ECB rate cut has created a dovish sentiment and pushed the euro lower, it's not the only factor affecting the EURUSD. The US dollar's strength is also playing a significant role in the pair's current movement. Therefore, we need to consider both the economic outlook and the technical indicators to fully understand the EURUSD's dynamic. Looking at the 15-minute chart can help us to see shorter-term trends and potential trading opportunities. The 15-minute chart shows a range-bound movement in the EURUSD over the past few hours. We can see that the pair has been trading between the 1.0885 and 1.0895 levels, indicating some potential consolidation. Traders might be looking for a breakout from this range, which could signal either further upside or a continuation of the downtrend. This chart gives us a glimpse into the short-term volatility that's impacting the EURUSD, and it's important to factor in this volatility when making trading decisions. To sum it up, the EURUSD is currently facing significant headwinds from a dovish ECB and a strong US dollar. The daily chart shows a clear downtrend, with a break below the 1.0800 support level potentially signaling further weakness. The 1-hour chart reflects high volatility, but the downtrend remains intact. The 15-minute chart shows a range-bound movement, which could be a sign of potential consolidation. Traders should keep an eye on the 1.0800 support level, as a break below this level could trigger further selling pressure. On the other hand, a strong rebound from this level could indicate a potential shift in sentiment and a move towards the 1.0900 resistance level. It's important to remember that the market is always in motion, and the EURUSD is no exception. Therefore, it's crucial to stay informed about the latest economic developments and monitor the technical indicators closely. By understanding both the news and the chart data, you can make well-informed trading decisions and navigate the EURUSD's dynamic market with confidence.